It's been a very strong performance for the Australian share market in 2015. I wanted to cover off on the performance of the Australian share market and more importantly some of the key themes for investors and traders going forward. If we have a look at the market, there has been a strong performance in 2015. Behind me is the 52-week performance of the ASX 200 index, and you can see that the last 3 months the market has been powering ahead. At the moment, the market is testing the 6,000 point mark, which is a key psychological level. If we do see this mark being broken, then that would be a bullish signals for stocks to continue upwards. On the buy side, one of the themes that have emerged is that mid-cap stocks are outpacing the gains in large blue chip companies, and that's because most of the large blue chip companies are looking overvalued, and it's very difficult to find value on the large side of the market. So it does look like the medium-sized market is quite popular on the market, and that's been reflected in price performance. On the sell side, unfortunately, things that are cheap have gotten even cheaper. Two areas which have been sold off a lot in the past 52 weeks are energy, oil prices, as well as iron ore. Both of these continue to suffer over the past month. We've seen energy prices or oil prices down another 6%, and we've seen iron ore prices over the past month down by 12.5%. The best side has been the financial index, mostly the banks. In fact, the banks have been powering ahead not only in the year to date but also the past month, and we've seen record performances from ANZ, Commonwealth Bank and Westpac, all three of these banks reaching all-time record highs. The momentum for the market is currently still positive, and a break of the 6,000 point mark would reconfirm that. There are some key themes to be aware of. First is that we have seen outperformance from those economies and countries which are participating in quantitative easing. In fact, over the last 52 weeks, the Japanese stock market doing extremely well with a gain of 38%. Same with Germany, with Europe doing quantitative easing. We've seen the German DAX up by 29%. Now that compares to Australia, where we've seen a gain of just 12%. And the US, the S&P 500, which has been up by 13%. So those countries embarking or in the midst of quantitative easing, those stock markets will continue to do well. The second theme is the falling interest rate environment here in Australia. The rate falls expected in Australia are now baked into the pie or baked into expectations of the market. And that's being reflected in bank share prices, where we are seeing the banks reaching all-time record highs. What happened with the last rate cut in Australia were that a lot of money managers were caught offside by the surprise interest rate fall, and were looking relatively underweight the banks. So we saw a strong bank rally after that rate cut. Now the next rate cut, that's unlikely to happen because the market is already positioned for 2 more rate cuts in 2015. So we are expecting lower rates, but a lot of that price action that we would expect from those lower rates has already been baked into the market, and the market already has priced this in. Generally, lower rates are good news for companies with large piles of debt, because that debt becomes cheaper to service, and those companies offering higher dividend yields. And these areas of the market have already run ahead of those interest rate cuts that are expected later on in the year. Now the third theme are US interest rates, and this is the key theme dominating markets. Now the US is looking to move off that 0 to 0.25% band, and the market is expecting this to happen sometime between June and September this year. Now, expectations around this are driving asset markets. So this is going to be a key inflection point for the markets. We've already seen the US dollar strengthening ahead of this move, and this is going to be one for investors to continue to watch. If we do see rates rising in the US, that means growth becomes more expensive in the rest of the world, and we could see a negative reaction for risk assets. So those 3 key themes are very important. First of all, outperformance from countries that have embarked or are embarking on quantitative easing, mostly Japan and Europe. Secondly, that we are expecting rate cuts here in Australia, but that's already baked into the pie. So don't expect huge amounts of reaction from things like bank shares and high yielding stocks with the next couple of rate cuts, because the market is already anticipating that. And thirdly, keep an eye out for US interest rates. That's the key macro theme dominating markets at the moment. So it's been a very strong 2015 so far. At the moment, we are testing that 6,000 point psychological barrier. If we surpass that, then that would be a bullish sign for stocks. But we do need to keep an eye on the macro factors that were also mentioned. Happy trading and investing.